Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So we're going to start today's video with a pop quiz. Assume you are married filing joint in 2025 and the charts below show your taxable income and 2025 brackets. So for this example, we're going to be working with AGI of $550,000. We have three different itemized deductions: mortgage interest at $7,000, the state and local tax deduction at $25,000, and charitable contributions of $10,000 for a grand total taxable income of $508,000. Over here we have the marginal brackets and rates for married filing joint for 2025. So question number one, what is your marginal tax bracket for 2025 in this fact pattern right up here? And by the way, this is the softball question, so everybody should be able to get this one right. And the answer is you're in the 35% marginal tax bracket. If you're not sure how that was determined, look right here. There's our taxable income of $508,000. $508,000 is more than the top of this bracket right here. Therefore, every dollar of income that we have, which is greater than this amount, is going to be taxed in the next bracket right here, which is the 35% bracket. So whatever bracket the next dollar of income is going to be taxed in, that is what's referred to as your marginal tax bracket. So now question number two, if you earn $1 more in this fact pattern, in other words, instead of having $508,000 of taxable income, we have $508,001, one more dollar right here. So in that situation, one more dollar in this fact pattern, what is the effective tax rate paid on that additional $1 of income? And the answer is 45.5%. Say what now? That's right, 45.5% effective tax rate on that additional $1 of income earned. Now wait a second, how can that be possible? The brackets only go up to 37%. Let's double check that. Yep, the top marginal rate is 37% in the married filing joint brackets for 2025. How can the effective tax rate on that additional dollar of income be 45.5%? Where does the 45.5% come from? Well, I want you to think back to a concept we first discussed in this video right over here when the One Big Beautiful Bill Act was signed into law. And the concept was there's a lot of mechanisms that the government can use to pinch money out of your family's pocketbook, usually without you really realizing it. That's the key right there. They do it without you realizing it. Now they'll tout, hey, look at these lower headline rates we just made permanent. And then they'll hammer you with 45.5% federal tax on every additional dollar earned in the above fact pattern. So where does the 45.5% come from? Well, let's figure it out. So the $40,000 SALT cap was one of the provisions put into place under OBA. Everybody's been talking about it. Those who can claim it are saying, wow, look at this big deduction I can now get. Those who can't claim it are saying, wow, look at this big giveaway to the rich people. But regardless of what all these folks have been saying, the deduction is not as simple as it sounds. There's a phase out. The deduction is decreased by 30% of every dollar for which your MAGI exceeds $500,000. So if you're in the 35% marginal tax bracket, just like the married filing joint couple we've been considering in this example, and you earn one additional dollar, then you are paying 35% tax on that $1 at your marginal rate, which is $1 times 35% equals 35 cents. Okay, everybody understands understands that, that part is easy. Now let's flip things around. If you are in the 35% marginal tax bracket, then you are also deducting things at 35%. In other words, the value of a $1 state and local tax deduction is equal to $1 times 35%, which also equals 35 cents. But under the new SALT cap provision from OBA, you have to reduce the value of your deduction by 30% for each $1 of income by which you exceed the phase-out threshold. So your deduction, which was previously worth $1 of state and local taxes times 35% equals a 35-cent deduction, is now only worth $1 of state and local tax times 35% times 1 minus the percentage by which you have to reduce the deduction. So that's 1 minus 30% equals a 24.5 cent deduction. So you lost the original 35 cents less the 24.5 cent deduction that you actually got equals a lost deduction of 10.5 cents in this example. All right, so let's put it all together. You had additional tax paid on $1 of income equal to 35 cents. That's a tax increase. You also had a loss of $1 of SALT deduction equal to 10.5 cents. A deduction decrease is the same thing as a tax increase, and therefore your effective tax rate on that $1 is the 35 cents of additional tax plus the 10.5 cents that you lost equals 45.5 cents of tax increase total divided by the $1 of income equals a 45.5% effective tax rate. The government yelled and screamed about all the lower headline brackets they're giving you, and then they turned around and hammered you with 45.5% federal taxes on the marginal income in this fact pattern. And here's the key: they did it without you even realizing it. Now you might say, well, yeah, but this particular provision doesn't apply to me. Maybe not, but other provisions do. If you're not laying out your numbers in the personal tax planning template, finding that room in those lower brackets sweet spot years, reducing your RMD exposure, calculating your family's annual and lifetime tax burdens, and capitalizing on every opportunity to minimize that burden, then you're just guessing. Take a look at these recent comments from members of the Personal Tax Planning Template program. Right here, I wish I had paid more attention to the tax implications of retirement when I hit 60, and I have encouraged others to learn from my mistakes. I'm now turning 73 this year and am facing large RMDs. Or this member right here, your spreadsheet is amazing, as is all the work you've put into it and the videos inside the members area for the Personal Tax Planning Template program. It's like having a financial advisor report whenever I want for whatever changes happen or that I want to model. On this channel, I'm not saying that you have to do a Roth conversion. What I'm saying is you need to figure out if you have to do one or more Roth conversions. Because if you do need to smooth out your income through Roth conversions and don't figure it out in time, I promise you the government will pinch tens of thousands of dollars or more out of your family's pocketbook over your lifetime. And here's the key, without you even realizing it. You can spend your life watching YouTube videos. 17 ways to do this, 105 ways to do that, 93,847 ways to do something else. And what happens when you're done watching all of those videos? Nothing, because without laying out your tax plan in numbers, spanning multiple years or usually decades, and figuring out where to find those significant tax savings opportunities, you're just guessing. You're never going to figure it out qualitatively. There are far too many moving parts. The tax code is not simple by design, so they can take your family's money without you even realizing it. it. So you have to lay out your numbers, but you have to want to. If you don't want to, well, rest assured that as an American, you have every right to pay too much in taxes. Let's go to the personal tax planning template and the all-new SALT deduction calculator. All right, so we're in the personal tax planning template. We're going to be right down here in the standard versus itemized deductions section. There's our deduction for state and local taxes. I have noted that the deduction has a maximum of $40,000 for 2025 through 2029. However, there is a slight nuance to that amount, which we will go over in a minute. I have also noted that the deduction will revert to $10,000 starting in 2030 and going forward, unless of course Congress extends or otherwise adjusts that provision. So as noted, this deduction of up to $40,000 is good for 2025 through 2029, which happens to be one additional year, 2029, that extends beyond when many of the other OBA provisions are set to expire. Recall that the auto loan interest deduction, as well as no tax on tips and no tax on overtime, are going to be good from 2025 to 2028, and the above-the-line charitable contribution deduction is actually not applicable to 2025. It starts in 2026 and then has been made permanent, so that one will go on indefinitely unless otherwise changed. So now let's hop over here to the SALT deduction calculator and see how it works. All right, starting right here with the phase-out calculation, we will begin with AGI, which pulls from the main tab of the personal tax planning template. We are going to have our modifications for tax-exempt interest and any other modifications that will be relevant in order to determine MAGI for purposes of this phase-out. Now, what I want you to note right here with the phase-out threshold, it does start at $500,000 for 2025, but there is a 1% increase each year between 2026 and 2029. So if we look in this cell, for example, for 2026, you can see that the number is being increased by 1% relative to the prior year. Now in the next two rows, we will have our over the limit dollar amount as well as our deduction phase out. Currently at this level of MAGI, we don't have any phase out, but I'm going to change the MAGI just for illustrative purposes so we can confirm how the phase out calculation works in just a moment. Then down here in the max deduction calculation, there's the max deduction of $40,000 for 2025. Now, similar to the phase out threshold itself, there is a 1% annual increase in the maximum deduction. That is why you see this amount growing by 1% in each of these other years. Then finally, we'll have our deduction phase out itself right here, and then the maximum deduction after phase out in the final row. And these are the amounts right here in the final row that will be linked back to the main tab of the personal tax planning template, and you can see those numbers are visible right here. Okay, so next up, let's test the phase out calculation. There's our AGI row right there. For 2025, we currently have $170,000 of AGI. I'm going to go ahead and adjust that for purposes of this example to $550,000. So back over here on the SALT deduction calculator, there's the $550,000 of AGI. You can see that results in a deduction phase out of $15,000. So down here, when we subtract the $15,000 from the $40,000 maximum, we are left with a maximum deduction after phase out of $25,000. That, by the way, is how the numbers were determined back here when we were setting up the pop quiz. There's the AGI right there of $550,000, and there is our state and local tax deduction of $25,000. And I wanted to repoint that out just so it was clear that this married filing joint couple right here didn't just have $25,000 in state and local taxes. They had a full $40,000 in this example. They just happened to be phased out by $15,000 because of their income level. So for members of the Personal Tax Planning Template Program, I do have pop quiz question number 3 for you. And that is, based on the new provisions under OBA, what is the one additional item that needs to be added to the $40,000 SALT calculator to get it ready for 2025 through 2029 planning? I have uploaded an all-new training video to the members area answering that question and going over additional details about using the SALT calculator in conjunction with the personal tax planning template. So if you're already a member, you can log in at your convenience and check that out. And if you're not already a member, the personal tax planning template program is available for purchase at the link in the description below this video. Your purchase helps out the channel and provides you with a tax planning and training tool set that you can use throughout your life to help minimize your taxes and maximize the after-tax cash flow that remains in your family's pocketbook. So it's a win-win for everybody. As I mentioned, lifetime access to the program for a one-time access fee can be found using the link in the description below this video on YouTube. So that's going to be it for today's video. Thanks everybody for watching, and I'll see you next time.